Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
And he was walking through the streets of San Francisco, banging a pan, shouting, "Gold, gold," from the American River and holding up nuggets, at the same time as selling the tools the gold seekers needed. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about the picks and shovels approach, finding real gold in the AI rush. AAA, isn't it funny how times change, the years on the calendars change, but people stay the same?
Right, exactly.
Tell us more about this Samuel back in 1840s and the American gold rush, AAA. What does that have to do with AI?
Well, Samuel Brannan was the first, they say, was the first millionaire in San Francisco. And he didn't get it by digging for gold. What he did was he used the pick and shovels approach, as they call it, right? Which was he went around and when the word spread that, gold was there, he bought up every pan and shovel and pick and all the things that the miners needed to go searching for gold. And he started selling them through the streets, like I said in the thing, right? He's going in the streets, but hitting a pan, gold from the American River, and holding up nuggets of gold, right? Not that he got them from the American River, right? But hold up these nuggets, right? And a very smart guy to be able to do this, right? And the town went crazy, and prices went sky high on these picks and shovels and tools that they needed, right? And we like watching that movie North to Alaska with John Wayne, right? And they had these makeshift camps, and inflation was going crazy, right? The price of a meal was going up like so fast, and the price of a place to sleep so fast, right? And that's what was happening, and people were making money off of the sidelines as opposed more than gold itself. A lot of people went broke in the streams, struggling the streams, freezing streams, right? They went broke. While this guy Sam, he was making in today's dollars $150,000 a day just selling picks and shovels, right? Selling all the tools that the gold seekers needed in order to seek their gold. So, and the same thing like with Levi Strauss, with the jeans. He got rich making sturdy jeans for miners, not digging holes. Right? Yeah. So the real wealth went to those providing what everyone else needed to chase their dreams. And today there's a lot of people chasing dreams, right? But how are they doing it? I was watching I like these detective movies and stuff like that. And I was watching this one, and the guy that died owned his own island. And one of the police officers said, I'm going to own my own island someday. And the other police officer said, yeah, sure you are. Right. And he said, oh, he's one lucky guy. He worked hard, to get that money. There was no luck involved with that. Right. It was working hard to do that and having good ideas to do that. And that's what Levi Strauss and Sam Brennan here, had from that standpoint. And today, though, everybody's getting caught up with the AI thing. Oh, I'm going to invest in AI. And it's a great concept to invest in AI, but are you investing in the right AI, right? Just like, all right, history repeats itself. If you don't know history, you're doomed to repeat it. And what you said early in the show isn't it interesting how people don't change? So that's why history repeats itself, because people don't change. People are the same from generation to generation. About the time one generation forgets the mistakes, another generation, they make the same mistakes, right? And so from that standpoint, back in the dot-com era, everything was great. Oh, the internet's going to go and it's going to pop and buy. And all these things, all these mutual funds and all these stocks came out for the internet, and people were buying them right and left, and then crash, bang, everything fell apart. And, Cisco's a great example, right? Cisco was a company people bought, but it fell down. It's a good company, but the share price, has it made it back to date, finally, 25 years later, Daniel? It's not even back to the same share price yet, right?
No.
And so if you bought it at that point, you'd still be underwater from a share price standpoint. But that's the thing, when the people are talking about AI or any kind, the stock market in general, right? Oh, the stock market is where you make all your money. there's been a lot of people that made money in the stock market. Yes. But the question is, what's going to happen with you if you just start investing? If you're, 60, 65 years old and you start investing in the stock market now, what's going to happen? Are you going to make a lot of money? You're going to lose a lot of money. You start, I'm going to invest in AI. It's the next hot thing. Okay. But are you investing in the right AI stock? Are you investing into Amazon AI, or the, so to speak, stock of the .com era? Or are you investing in Tollkeeper mutual fund of that era that went belly up?
At AAA, it's about timing too. Like, what's your competitive advantage, right? Because those are two great examples. But what did Amazon had a 85 or a 95% correction? Who was going to hold it through and not thinking it was that same as the Tollkeeper? Or even Microsoft, one of the largest, best companies today. It took 16 years to get back to even on that company. And so what is your competitive advantage that you think you know better which is the right company to buy? And people forget, and we're about education, right, AAA? People forget you couldn't get onto the internet without Cisco. It made the most sense. Cisco is going to be the biggest company in the world. Cisco is going to be the best company ever. You can't get on the internet without Cisco. And so many people missed Apple, and the iPhone is what got people on the internet. Right? Yep. Like the app, like the internet was amazing before the iPhone. The iPhone really changed everybody's.
Exactly. I mean, I don't know where it comes in ranking as far as the number one, the first smartphone or any of that kind of thing, but it certainly made it easy for people to gain access. And then from there came the iPads, which made people easy to get access and all those other things. So yeah, you're listening to Financial Strategies with Andrew and Daniel Agemy. And, we're talking about the picks and shovels approach to gaining wealth and living and retiring. To go along with today's show, we have a paper that we'd love to put in your hands for free. And this is just called simply Stock Market History, lessons that you can learn from stock market history. So, you can have that for free by calling us at 800-725-7616 for your free copy, Stock Market History, 800-725-7616. This and Financial Strategies. This father and son team coming to you with the picks and shovels approach, finding gold rush, finding real gold in the AI rush. So, Daniel, that's an interesting story about Sam Brannan there and how he became a millionaire doing it. He didn't go after the gold itself, but he found a way to make more money than the miners themselves. And, what's the point here with the AI stuff?
Well, it's kind of funny because we're talking about the gold rush and the AI rush. Right. And it's so funny because both things are booming right now, right? Gold is booming. Gold is hitting all-time highs. And AI is not as booming as it was a few months ago, but AI is booming. And one of the barometers you can look at is what people want to own, what people think is a good idea. But typically, by the time it comes down to the regular investor, it's already at all-time highs, or it's near all-time highs.
Right.
And we glorify the news, media, everything glorifies the winners. Just like if you thought who got the richest, and the majority of the people who got rich in the 1840s gold rush, was it miners or was it picks and shovel people? Well, we know who was more consistent, right? You had rags and riches. You had a couple people who got really rich mining gold and they got glorified, and you had camps and droves of people and tons of people who just went completely broke. And but we glorified those ones that hit it, and that's part of what has made America great, right? Is we glorify entrepreneurs, we build entrepreneurs up, which allows us to have some of the best companies in the world, which allows us to have some of the wealthiest people in the world, is because we've created a system to glorify and to build up and encourage entrepreneurs, right?
Yep. But
there's a gambling type, which is, I'm going to go try to find this gold in the river. If I win, I'm a multi-millionaire. I don't even know if they were millionaires at that point, but I've got plenty of money to last me all I need if I hit this right. Or I'm going to build this business that benefits from everyone's greed, that benefits from everyone's optimism.
Right.
And that encompasses what we do here. is we take people who've already built up their wealth. We're not so interested in helping someone who has nothing hit the next GameStop and risk it all so that they can, have $1 million in the bank, right?
Right.
We're taking people who've worked hard, created a business, worked for a company, saved up some money, and to generate consistent returns off of that so that they don't have to worry in retirement, so that they can live the lifestyle that they want to have. And that's so similar to this picks and shovels approach, not even getting into how you could benefit from the AI revolution with the picks and shovels approach. But it's funny because this wasn't even on our thing, but how that parallels, right? You want that consistency. You don't want to risk it all at some point in time. Right. You're not interested in that. You realize you don't have the competitive advantage, or you don't want to put in the time to get that competitive advantage. You were telling me about somebody earlier who's got a competitive advantage in a very niche piece of the market, and he does a very good job. Does he want to do that forever? Who knows? Maybe he will, maybe he won't, right? Right. But right now it's working. Maybe it will work forever, maybe it won't. But we work with a lot of people that we see at some point in their time, they don't want to manage their real estate anymore. They don't want to manage their stocks anymore. They don't want to have to do all the study it takes to have that competitive advantage. They just want to move forward, picks and shovels approach, steady Eddie, and live their life. Stop worrying about all these other things.
Exactly the point. And, so that's a great thing about America, right? We're all so different, right? That's why we all wear different clothes, wear different cars, and we're all so different. And some people are very aggressive in nature. Some people are very conservative in nature, but everybody wants to make money. And, the question is what's the risk versus the reward? And that's really what today's show is coming down to, in my mind, is, the risk versus reward. As you're going for the AI, what's the risk? What's the reward? You just need to be able to know what that is and understand what that is. And for those of you in our listening audience, if you want to continue to study and learn more about what we're talking about and about what we have to say, we've got this excellent animated video book available for you if you like that. It's got 3 different channels, 3 different tracks with 3 different videos on that will educate you further in these things of preparing for or living retirement, making sure that you are able to retire and stay retired. We'd love to put this video book in your hand for free by calling us at 800-725-7616. The first 5 first-time callers, 800-725-7616 for your free copy of the animated video book with 3 different retirement-oriented tracks on there to be able to help you educate you further. 800-725-7616. Call now.
Do you have any questions for me about retirement income source?
I just want to make sure I can invest well enough to have enough income, enjoy my retirement.
We build a custom retirement plan based around your income and goals.
How do I know I can trust you?
Building trust does take time, but our investment advisory arm is comprised of fiduciaries, which means our obligation is to you, so you can enjoy your retirement with a little more income stability.
I'm in.
That's 2 out of 3.
This is Financial Strategies with Andrew and Daniel Agemy.
So, Daniel, we're talking about finding real gold in the AI rush. And earlier, I talked about Toll Keeper, which was a mutual fund that I invested in. I invested money for all you kids into that fund, and I lost it all, basically, right? It was a great concept. It was called Toll Keeper because it wasn't the internet, but it was those places that you had to go through to get to the internet. Kind of thing. And, wires and all these different structural things was a great concept, right? And it took off a little bit there, but then it went kerplunk and died with so many other things. And we talk about history repeats itself, but, it's so interesting how what goes around comes around. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about the picks and shovels approach, finding the real gold in the AI rush. And AAA, there is a lot to be learned from looking back at history and seeing the different bubbles, seeing the different, this is a no-brainer. And there are some barometers that you can look at. The way people talk about things, the certainty that people have. There's a famous investor who's always talking about how risk becomes our friend when things get expensive, and risk is not our friend, but it builds up this certainty because it continues to go up and up. And so when I hear people say stuff like, well, just buy me some AI stocks, I want some AI stocks, it makes me think back about, you remember we had that client and they wanted to be a little aggressive, and we bought some Tesla in their account. Now this was like maybe 2018 or so, and Tesla was priced to go bankrupt. It was so cheap. And they came in and you said, just let me keep the Tesla in their account. And they were, Andrew, you're an idiot. Why do you have this Tesla in my account? And you're just, it's 6 shares. Well, how bad could it be? And how no one wanted to own it at that point in time. Tesla's an AI company, but people didn't realize that it was an AI company, and they didn't realize that was the time to get in. And they fought us on that.
Right.
And then after it does 10x, they're like, why didn't you buy more? How could you not know? How could you not know? And the interesting thing is, right, those barometers, when people are scared to be in something, that tends to be the right time to enter. And when everyone knows about it, that tends to be more of the end, right? The end of the cycle. That doesn't mean it won't go up more, and that doesn't mean there's still good deals, but what's your competitive advantage? So how do you remove that timing risk? Again, we look at Microsoft. If you bought it in 2000, it's a great company then, it's a great company today. Right. But if your retirement was dependent on it, you had 16 years. Microsoft from 2000, it dropped and it didn't go back to even and stay above that time until 2016. Wow. That's a long time not to make any money, right? AAA. Yeah, and it's a wonderful company. So that same investor that I told you that says risk becomes people's friends when things are the most risky. Right. Also talks about averages and how averages fool us. Right. Right. And so you can look at a chart and you can say, well, on average, this works. But if you don't make any money for 16 years and you're in your retirement, how are you going to fund your lifestyle?
You're going to have to take it from principal. That's not good. Run out of money. You know, when you're talking about this, Daniel, the thing that comes to my mind is a lesson that we can all learn from prior to the Great Depression, right? There was somebody, a well-to-do person, I forget who it was off the top of my head, was getting his shoes shined. And the shoe shine boy gave him a tip, a stock tip. He immediately left that chair, right, when he got done, went and pulled all his money out of the stock market, because he said, about the time that the shoe shine boy is giving me stock advice, I know that's time to get out, because it's all around, right? And that's what typically happens. History, people, we see the stock market goes up, but people's experience, the retail investors' experience, is not a buy low, sell high experience. It's a buy high, sell low experience. Like you said with Cisco, it took 16 years. How many people bought that and sold it for less than they bought it for over that 16-year period because they didn't have the patience to wait it through? The key is being able to buy low, sell high, but understand you're not going to buy at the lowest, you're not going to sell at the highest, but also be able to understand, like Rockefeller says, that the time to buy is when there's blood in the streets, when nobody wants to buy, kind of thing. And, Daniel's been, listening to the audience, you listen to Financial Strategies, Andrew and Daniel Agemy. Today's topic is the picks and shovels approach. And Daniel was talking, about a certain person who has given some good advice on things. And guess what? We have that book for you today. We want to give it out to you for free for the next 5 first-time callers at 800-725-7616. Called The Most Important Thing by Howard Marks. Howard Marks has been around a lot of years. Uncommon Sense for the Thoughtful Investor. It's a great book. I love to put it in your hands. Successful fund manager of Oak Tree Capital Management. Yours for free by calling us at 800-725-7616. Again, the most important thing by Howard Marks, yours for free. Next 5 first-time callers, 800-725-7616. Call for that now. You're listening to Financial Strategies, this father and son team coming to you because people don't know what people don't know. And today's topic is the picks and shovels approach for finding real gold in the AI rush. Daniel, so Microsoft was underwater for 16 years before it went above that point and stayed above that point. Cisco, again, a backbone of the internet company, right? Hit $82 a share in 2000, and 25 years later, it's still only around $66 a share, right?
Yeah, they made a lot of money in 2000. They make a lot of money today. But just because it's a good company doesn't mean it's a good stock.
Okay. Good point. Good point.
Right?
Yeah.
And what does that mean? What does that mean? Just because it's a good company doesn't mean it's a good stock. You can pay too much. Microsoft was a great company. It took 16 years to get back to even. Cisco is a great company, but it still hasn't got back there. So you can pay too much. And now there's companies like Palantir and NVIDIA right now, and people are giving these things the most. Some people will say NVIDIA doesn't have a crazy valuation, but when a $4 trillion company is trading at these crazy PEs, is it a crazy valuation or not? Some people thought Cisco did, some people thought Cisco didn't. They thought it could grow into it, and that's like going and mining. Getting your pan out and going and trying to find a gold mine. If you're right, it pays off big.
Right.
The question investors have to ask themselves is, what does history say my probabilities are on these things? Right? And then what can I risk? How much do I want to risk on that? Right?
Yeah. Right.
You were talking about retail investors and their perception. A lot of retail investors today are looking at markets through the lens of this print money forever and quantitative easing type view from around 2008, 2009, 2010, where the Federal Reserve is literally going into markets and buying assets.
Right.
It's pretty hard to lose when that's happening. But will that continue forever? That's why investing, you can make so much money is because you don't know.
Right.
What does history say about that? Well, history doesn't look too favorably upon governments debasing their currencies, which is what, Federal Reserve or anybody going in and buying assets do. So how can people, now we get to the picks and shovels approach, AAA, how can people start to benefit from the AI rush without just going into all the names everyone already knows about, right? You've been around for a while, AAA. What do you see happen when everyone's talking about the same stocks? Is it typically they have great returns going forward, or when everyone seems like this is predictable and this is noble, AI is going to change the world, let's buy the most named AI stocks, internet stocks, whatever. Does that usually end in tears or in everyone getting rich?
Yeah, it's more the tears approach and everyone getting rich, right? Because it's been there, done that. By the time that is news, by the time that gets out to everybody, it's run its best course. There's a stock that you invested in for us years ago before anybody knew who it was, and it's done 10 times plus, a few of them. But people didn't even know what those were. Now they're household names, and that's run its course for the most part, right? Apple, a lot of people say, yeah, but I got an Apple at a good time. Well, yeah, but what would have happened if you actually got an Apple back in 2000, right? Or even 2007 when they came out with the iPhone, right? It was after that now Apple's got, it has a name for themselves, and it's becoming aware of it, and people are buying. There's been people used to invest in the old days with buy the stock, buy the companies of the stuff that you buy, right? Blue chip kind of companies. But back when they did that, it was more for the dividends than the growth aspect. right? It was the income off of the things.
And that was the thought, to have the competitive advantage. That was like a Peter Lynch thing, right? Invest what you know, invest what you use, because you have an idea of what that company does, right? You can understand it.
Today, people are throwing darts at a dartboard, and we know one person that he's got a bunch of different positions in his portfolio, but Apple is carrying them all. He's got too much money in one stock, and he buys all these other things, and they're losers. But what's holding everything up is the Apple stock. But something happens to Apple, and that's not going to be a good situation for him. But it's a very interesting situation where things are with this AI approach, that people are buying into AI, with the stock market. People are buying into the stock market, which I'm not against the stock market, but I want people to have an educated view of investing in the stock market. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is the picks and shovels approach, finding real gold in the AI rush. And, with this, if you're in or close to retirement, 5 years, 10 years before retirement, or in retirement, there's things that you need to be considerate of. And can you retire? When can you retire? We have a report that would be able to help you understand that stuff. And it's called the Retirement Readiness Report or Retirement Risk Report. And if you'd like to be able to get involved with that, call us at 800-725-7616. So you can find out if you can retire, when you can retire, what your retirement would look like. 800-725-7616. Ask for the RRR. 800-725-7616. RRR stands for Retirement Readiness Report or Retirement Risk Report. Call now.
Time for some tough questions for these financial advisors. What makes retirement income source different from other financial?
Our extensive experience generating investment income quickly so you can have financial peace of mind, navigate your retirement smoothly, and have more time to spend with family and doing the things you love.
We gotta talk to these guys. We're done here.
This is Financial Strategies with Andrew and Daniel Agemy.
So everyone's betting on ChatGPT and AI software companies, but let's think like Sam Brannan. What do all these AI companies desperately need? I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about the picks and shovels approach, finding real gold in the AI boom. And AAA, let's talk about the way Sam would invest. Let's talk about the picks and shovels approach. We've been talking about crazy valuations. We've been talking about a lot of history and how things have worked. But let's dive into the Sam Brannan way of investing.
Finding the real gold. Yeah. We've been baiting everybody through this whole, thing. So now let's get to it. Where can you find the real gold? Energy.
Yeah. I mean, the amount, I don't know if people realize the amount of the energy that AI uses, or how hot the chips get for the AI processing, not to mention the power lines that will be needed to get the compute power from the data centers to your phone or to your device, whatever you're using, right?
Mm-hmm. Right.
I think it's fascinating. A few years ago, when Bitcoin mining, when there was all over the news, Bitcoin mining is going to boil the world. It uses more electricity than a small nation, all these kinds of things. And the compute, that's all gone away because the compute power needed for AI blows that away. And so now nobody's talking about the amount of compute power that's needed to power AI, right? The amount of power. I don't know if these estimates are right. It seems light to me, but they're saying we're going to need 6 times the amount of power we currently generate. And that's without all these other things like AI cars, right? Self-driving cars and battery cars and things like that. But just to power the compute power. And we're not going to go down the tinfoil hat stuff. You know, sometimes we like to talk about the tinfoil hat stuff, but we're not going to go down the tinfoil hat stuff as far as the AI and the AI learning and the AI trying to buy up all the power plants itself to power these so we can get more knowledge. But just to use it the way we're using it now, the compute power that's going to be needed to run these processors, the water to cool these things down, and then, like I said, the copper and materials to build out a grid strong enough to run these things is mind-blowing.
And, but that's how is this energy going to be provided? And investing in energy companies is good. Investing in these companies that are, that's the picks and shovels, right? The energy is the picks and shovel, the water, right? And copper, all these different kinds of things is a great way. But how do you know what to invest in, right? Because there's a lot of copper companies. There's a lot of water companies. There's a lot of energy companies, which are the better ones?
Well, the good news is, AAA, we talked about a great company doesn't make a great stock, right? So Palantir is a great company, right? It may be like Cisco, it may be like Microsoft, it may be like something else where it has this crazy valuation. People see the potential, and in 25 years, it may be the biggest company in the world. But what's going to happen the next 16 years? Is it going to grow into the valuation, or is it going to come down, and in 16 years it comes into the valuation? So you can look at valuation metrics, you can look at earning metrics. And the good news is these producers of things like copper and electricity and the real estate investment companies that build the data centers for these things, or companies like Brookfield is a company that's investing in renewable energy, power plants, all over the world, not just the US, to build up the infrastructure needed for the AI revolution. These things are very inexpensive. And you know what? A lot of them, especially the copper mines and the power plants and things like that, they pay great dividends.
Wow.
So you don't need it. You don't need to worry about buying a great company at a bad price. You get a great company at a good price, and you get paid to wait for the AI revolution to go through, if that's in 5 years or if that's in 25 years, however long it takes. You get paid while you wait. That's the whole point.
Yeah, here it is. That's exciting to be able to get paid while you wait. And then you take out the timing, right? Timing the market is a very difficult thing. And when is this all going to happen? Well, who knows, right? But if you stick to a strategy, a good, a productive, proven strategy, that's key. And that's what, you're talking about that's how to find real gold, is getting a strategy of consistency, one where pigs get fat as opposed to hogs getting slaughtered. And, today, we are listening to Financial Strategies with this father and son team, Andrew and Daniel Agemy, coming to you talking about the picks and shovels approach, finding a real gold in the AI rush. And we have a paper that we put together for you today that will help you understand this a little bit more, educate you a little bit further, called Stock Dividend Investing. So TR equals I plus G. If you're a regular listener, you've heard that before on the show. The I is the dividends, the income. And that can make a huge difference. That's what makes a huge difference to the S&P 500. Only a 1% to 3% dividend makes a huge difference with the compounding over time. But I'd love to put this paper in your hand so that you can learn and gain from it. 800-725-7616. Ask for it for my name, Stock Dividend Investing. Financial Strategies. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Daniel, so have you picked out some of these things as far as, you have your eye on some of these things as far as like the copper companies and water companies and different things like that, and from that standpoint?
Yeah, we have especially we have an international dividend portfolio that invests in a lot of these companies. Because they're international companies, they trade at much lower valuations than the premium you get in the US. But these are international companies, right? They have They invest all over the world, and they make a lot of money. They pay nice dividends, and they've got great upside on top of that, right? So that's the type of investing that we like to do in these. There's the energy story, right? The amount of energy we're going to need, not only worldwide, because if you take a country like India that's starting to have a higher standard of living like we have in the US, the amount of energy that they would need, the amount of copper, the amount of materials they need to build out that infrastructure, right? Even if you're talking iron ore, you're talking battery materials, you're talking copper, you're talking these types of things, right? To bring them into a lifestyle, a standard of living more like the US than what they have been living. Not even talking about that, just to build out the infrastructure for the AI energy needed. We're talking about a lot of materials, and we look at how broken down the U.S., especially infrastructure is, right? The power grid, the internet, these types of things. It's bad. That's where forest fires, California, forest fires in Hawaii, these different things, a lot of that has been due to power grids failing. So are we going to fix that up? Then the water, we talked about water to cool these machines. We can look and we can see what's going to be needed to support this boom, and people can take advantage of that, right? Some of the royalty and streaming companies we talk about all the time, some of them have to do with water rights, and some of them have to do with energy creation. And so what ends up happening is a lot of these power plants for the AI, they want to build it close to the energy. So places like the Permian Basin, for example, they want to build power plants, or I'm sorry, not power plants. They want to build these data centers near that so they can get the energy, power the data, and then they ship the compute power from there. So they build it closer to these things. There's also a lot of water there. So there's different things you can look at where you can take advantage of what's going on with those things. And then there's something we haven't talked about, which would be that digital money bridge. So think about this, AAA. You're sitting in your Rivian, right? It's driving you. We're down however many years this is. If this is next year, like some people think, if it's 5 years down the road, you're sitting in your Rivian, all electric. It's driving down this brand new road that charges the vehicle while you're driving. So it's charging as you're driving down the road. And there's a slowpoke. Maybe it's a Toyota Prius, and it's a slowpoke. It's also electric, and it's just barely moving, and you want to get around it. But these roads, you can't pass people because the cars are all going down these charging systems. It's like a track. And think about the amount of copper and the infrastructure, the raw materials that needed to build out this highway. But you're just flying down, and you're an aggressive kind of guy. You want to get around this slowpoke car. You're driving this nice Rivian. You're ready to pass them. So your car says to the car in front of you, I would like to pass you. You have nothing to do with it. The cars are talking to each other. This is the future, right? And the car says, well, what are you going to give me to pass? So the car takes a tiny little fraction of a Bitcoin or whatever digital currency that is and pays the Prius in front of you to get out of the way. It gets out of the way, you move forward, and you go down your way. These are the types of systems that will be happening in the future automatically with us thinking. So we built the internet. The internet disperses and gives everyone knowledge, right? Well, now we're in the new AI revolution. What is the digital money? What is the concept for these AIs to buy compute power, or to, when your electric autonomous car pulls up to the to the charging station, how does it pay? You're not going to get out of the car and go put your credit card in. How does that car pay for the charging? And we have to start thinking about something. What is the native money going to be for AI, for these autonomous vehicles, for your robot, your housekeeper that's a robot that runs to the grocery store and gets you some how is it going to pay? Is it going to have a credit card, or is there going to be a different system to pay that, right? These are some of the things that we need to start thinking about too, because as we go into this AI revolution. What is the internet AI money going to be?
Right. Right. Well, Daniel, that certainly is forward thinking. And you've heard it here on Financial Strategies with Andrew Daniel Agemy, because people don't know what people don't know. And if I were a betting man, I'd bet that people in our listening audience, Daniel, just learned some stuff that they didn't know, because I sure did. But wow. So, the key is I'm just speechless, Daniel. I'm having a hard time here. Anyway. Listen, if you're in our listening audience, you would like to learn more about being able to retire and stay retired, we have a video book, an animated video book with 3 different animations, 3 different tracks that will educate you further on important things to know, like required minimum distributions and how they work, Social Security, or creating a portfolio full of income generating investments that will give you more than enough money that you need to live the rest of your life the way that you want to. If you want that video book, you can have it for free by calling us at 800-725-7616, 800-725-7616 for the first 5 first-time callers, 800-725-7616 for your free video book. Call now.
Important financial questions. Are you feeling confident that you have enough money saved to enjoy a stress-free retirement?
Honestly, I'm not sure.
That's where Retirement Income Source's investment advisory arm comes in. We exist to help you invest your money smartly.
I'm struggling to accept my retirement without a steady paycheck. So can you help me invest into a profitable revenue plan?
Absolutely. We have top advisors nationwide who have a fiduciary obligation to you, helping you generate retirement income.
You're locked on to Financial Strategies with Andrew and Daniel Agemy.
Welcome back to Financial Strategies with Andrew Daniel Agemy. Today's topic is the picks and shovels approach, finding real gold in the AI rush. I'm Andrew Agemy with my son, Daniel Agemy, coming to you today because people don't know what people don't know. And Daniel, where is the gold? Finding real gold. That's part of our title, right? Finding real gold in the AI rush. Where is the gold in the AI rush today for people who are in and close to retirement, people who don't know how to do this themselves?
Triple A, I really think that you need to get paid, right? You need to get paid. So you need to figure out, number one,
well, thank you, Daniel. I like getting a paycheck.
Well, when you invest, think about this Samuel, right? Samuel Brennan, he was making, they said, maybe $150,000 in today's money a day, right? He figured out how to get paid. That's what we're always talking about. How do you get paid? Do you want to pull Microsoft, amazing company, and wait 17 or 16 years to get back to even? AAA, when we're working, you and I are working with our clients, right? We go through this educational process and we look at market history.
Right.
And we look at from the 2000 to 2013, that if you put your money in an S&P fund, you had no fees and you didn't get freaked out in a 50% drawdown or a 60% drawdown.
Right.
You went through all that. You had the same amount of money 13 years later. And all of our clients say that's not acceptable. That's not acceptable to me. That a client wouldn't make money for 16 years or 13 years. It's not acceptable to you, and that's not acceptable to a client. But we hear people say, well, that's what markets did.
It happened to everybody. Everybody lost money.
Everybody, right? So that's what we're talking about, the picks and shovels approach. When you're selling picks and shovels, you're making money when people are finding gold mines and when people aren't, right?
Right.
You're benefiting from the hype. You're benefiting from the stories that are going around town. You're benefiting from it all. That's where we want to get, is where we're benefiting from all the hype. We're benefiting from all the stories going around, but we don't need to be worried about the ups and downs. We're just getting paid, right? So we look at the energy story. We look at the copper. We look at the infrastructure. We look at the digital money bridge. Right. What we have a wonderful internet that democratizes information. In a lot of ways, we don't need a library anymore. We got the internet. You can go and you can buy whatever you want on a Saturday, on a Sunday, at 1 a.m. when banks aren't open. But why doesn't money work at 1 a.m.? It kind of sort of feels like it does in the U.S., but it doesn't really work. Where's the money for that? And that's where I think that looking at the money portion too. So you said, how do we benefit from that? We invest in the companies that are not the hyped companies, but the companies that are the backbones, the picks and shovels that pay us when they're doing good, or when there's not an AI boom, when it's not hyped up. That's what we're looking at.
Great. The thing that I love, I'm going to go back to my chickens and eggs thing, right? And this is how I visualize it, being a visual, is that, I talk about how when people invest only in the stock market, they're investing in roosters. When you have to eat during the retirement, you have to kill a rooster. And the problem with that is you can run out of roosters. But if you invest in chickens, and you get the eggs, your eggs are a renewable resource. So if you only eat the eggs, you'll always eat. If people don't need all those eggs, if they don't need those eggs, we take those eggs, we buy more chickens, so we get more eggs. And when we are doing that, we take those eggs, we're buying some of these companies, we're buying some more of these companies, right? These utility companies and the mining companies and the copper companies and the digital currency companies and all the, with a little bit. Maybe we're getting 1,000 eggs, let's say, right? And we take 2 or 3 eggs and we invest it in these companies, right? And we spread it around so that first of all, before we even buy them, we know which ones have potential for better. It's not just throwing a dart at a dartboard, right? And then we buy these companies, and then eventually they pop, and just like you said earlier about that Tesla, that the clients didn't want that Tesla. What are you investing in Tesla for? Why are you wasting my money? And then when it went 10 times the value of it, they were like, why didn't you do more? And that's that's the kind of thing that we're doing for our clients without them even seeing it, without them. It's kind of like what you were saying with that electric car, right? With the electric Rivian wanting to pass that hybrid or that Prius. And the Prius says, what are you going to give me? And now I'll give you some digital currency, right? It's kind of like the same thing. We're doing that in the background without people even knowing. And it translates into a portfolio that they cannot outlive, essentially.
That's exactly right. You protect what you have. If you're interested in using some portion to benefit from this stuff, you dedicate a portion to those high asymmetrical type things, like the iPhone. Not the old thing, not the thing everybody sees. People saw Cisco, people saw you can't get on the internet without this, but everybody saw it and it got too expensive. That's why we're not even saying the data centers themselves. Everybody already knows data centers are needed. Everyone's invested in the data centers, right? Right. People are invested in the chip companies. You got to look outside the box.
Right. Exactly. That's a very good point.
And AAA, you had mentioned earlier too, that when everyone is talking about it, it tends to already be done. At least for now, it tends to already be done, right? Mm-hmm. Once everybody knows that for certain this thing is going to be booming, then it's probably not booming for much longer. And you can test that if one of our advisors says to a client, is there anything you'd specifically like to be invested in? They're all going to say, well, I'd like some AI stocks, right? I'd like some chip companies. It's when they fight you because it's not understood yet. That's when you know those still have the potential to go. And the things everyone knows about, are running out of gas. I'm not going to say they're out of gas. They're running out of gas.
And, that reminds me exactly what happened with digital currency, right? And still to some degree, right? But we were encouraging people to get involved a little bit into digital currency. And, no, I don't want it, because they didn't understand it. But anyway, you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is the picks and shovels approach, finding real gold in the AI rush. And, there are certain strategies and time-tested principles that are key to finding that real gold. And, Daniel's mentioned an investor, and we have a book by him. Howard Marks has written a book called The Most Important Thing that we'd love to put in your hand that will give you some good, sound, solid, fundamental, strategic approaches to investing that will help you understand better what we do and what to look like to be able to retire and stay retired. We'd love to put this book in your hand for free to the next 5 first-time callers at 800-725-7616. The Most Important Thing by Howard Marks, a great strategic book that will teach you strategy for investing. 800-725-7616. Call now for your free copy. Daniel, people don't know what people don't know. And today we've been able to bring, I think, a lot across to people. But, with that, the key is what it means to them and what they can do with it. And that's one of the keys is our approach to getting paid, getting dividends and interest, getting these eggs, right? So that people can retire and have their retirement to be stress-free.
Yeah.
So...
Yeah, AAA. That makes me think about when you were talking about Peter Lynch earlier, and you said he would suggest that people invest in what they know, what they use, right? You go to Dunkin' Donuts every day. And that was one of his companies. He loved Dunkin' Donuts because you go to Dunkin' Donuts or Dunkin' now and you understand the business model enough. But what has happened with a lot of stocks since this quantitative easing forever type movement is people don't know what companies do and they don't care. Their product is their stock. That kind of happened to Apple. That has happened to NVIDIA. Their product is your stock. You ask what this company does, and they say the stock goes up.
Yeah.
Right? And it's happening more and more. And all we're doing is kind of going and we're looking at that Peter Lynch way of investing, the things that we need to make the economy run, not the things that their product is their stock and we buy it because it only goes up.
Right.
But looking back, what pays you? Does this make sense? And is this a resilient company? Because when you're in retirement or near retirement, resiliency matters a lot more than just,
That's right.
hope that you pick the next GameStop.
Right.
That somebody pumps it up higher than what it already is trading at.
Right. Daniel, I'm thinking about a conversation I had with one of our radio show listeners recently, who he was talking about, well, I'm not particularly happy with my current advisor at this. I mean, basically the only time I hear from him is when I call him about something, and, which is egregious, right? But he said, I don't know, maybe I should be doing this myself. A lot of my friends and my family, they're doing it themselves. And I said, well, the key is, if you have an advisor, they should be bringing value to you. They should be doing something that you can't do. You only have so much time. You should spend it doing it what you like to do. If you like to do like that other guy you mentioned earlier, he likes to, buy his own stocks and watch and he enjoys that, right? And what I said to that guy was, the problem is what happens if you die? What's going to happen with your wife? She's not going to do what you do, right? And so with this gentleman, I said, well, do you want to spend time investing and studying all these things so that you can know which companies to buy and that kind of, he said, I think AI is doing it. Yeah, but AI is good for the growth model. And I told him about how we go looking for, we go on AI looking for stuff that pays you, and AI has no clue what we're talking about. And I said, so then that may be fine for these younger people because they are younger than him, he admitted, right? For trying to grow their money. But now that you're in retirement, that's not the way to do it. You got to get paid. You got to get dividends. You got to get eggs, right? And that is a real key thing.
Yeah. And for the listening audience, who doesn't want to get paid? That's the perfect way to end AAA. Who wants to get paid? Who doesn't want to get paid? I think everybody's raising their hands. They want to get paid, not just hope that the valuation goes higher than it is today.
Yeah. Okay. Well, if you want to get paid, invest for the I more than the G, right? And take the stress out. So listen, if you're in our listening audience, we've been have enjoyed having you with us today. Picks and shovels approach, finding real gold in the AI rush with Andrew and Daniel Agemy, the father-son team coming to you on financial strategies to help you know what you don't know. And to go along with that, we have in our as we finish up the show today, we have a retirement readiness checklist. A lot of people don't know if they're ready to retire, or if they can retire, or all kinds of things, or what's involved with retirement. Well, there's income planning and Social Security strategies and health care and tax efficiencies and investment allocation and estate planning and lifestyle and legacy goals, all these kinds of things. This checklist will help you wrap your head around retirement readiness. We'd love to put this in your hand for free by calling us at 800-725-7616, 800-725-7616 for your free copy of the Retirement Readiness Checklist. Again, 800-725-7616. Call now for your free copy. And listen, we're looking forward to coming to you again next time. And in the meantime, I want you to get paid. And if you want to get paid, invest for the I rather than a G. Peace.